All right. Well, welcome one, welcome all to DeFi Crypto and Airdrops. I am Mike, aka Veteran Crypto, and here in a minute we will have. Oh, actually, they're here. I just need to add them. We have David,
Howdy.
and here in a second, let me add Jake in here. We had a little bit of technical difficulties, so on my end, so I apologize. We're not squared away, but
How's it going?
there we go. We got Jake, we got Dave, we got me. All right. So, welcome to the show. So, we're going to kick this thing off really quick because I know that this is going to be a longer discussion and I want to try to fit it all in the hour. But if you could, if you haven't, please go over and find us on YouTube. It is DeFi Crypto and Airdrops. And go ahead and like and follow. And then also in the description of both this episode and the channel, you'll find Metrics Finance, which is a tool that I personally used that Jake developed that allows you to track your DeFi portfolio and then also to simulate positions, actual positions, DeFi liquidity pool positions before you enter the position. So potentially what you could be earning. Also, if you would like to take David's DeFi University course, you can link it in there and start your journey on learning DeFi and how to earn with your bags and not just hodl and wait for the markets to pump like we're all trying to do right now. So with that, let's go to the chat. Looks like we got Black Ice. We got Jay. Appreciate you, brothers. We got Sean. We got Flippa Frank. Luis. Appreciate you all showing up. If you have any questions, please, by all means, this is our episode, this and Friday. If you have DeFi questions for the experts, David and Jake are definitely the experts when it comes to intermediate and advanced strategies. So please, by all means, get in the chat, ask your questions. I promise we'll get to them. David, Jake, how's it going?
I'll let you kick
Doing
it off,
pretty
David.
well. Doing pretty well. I'm watching these nice bounces that we've seen out of ETH and BTC over the last, couple of sessions. BTC bouncing from, what was it, 107 it touched at one point briefly, maybe wicked down below 108 just briefly, all the way back up to, if I just take a look at TradingView, 112 and change. But, the real story, I think, is ETH finally bouncing off of long-term support. ETH has been correcting after putting in barely a fresh all-time high recently. Really nice bounce overnight in ETH, but back up to resistance at $4,500. So been watching those two assets, and of course I track TradFi markets closely as well, and NVIDIA, looking for NVIDIA to hold 170. That's going to be important. But I think the topic of conversation today, we're going to talk about how to generate cash flow. I'm really excited to get into that. So that's my little market update.
Yeah.
Cool. How about you, Jake?
Well, as always, just enjoying accumulating assets. I had, over the weekend and coming Monday, Tuesday, a couple positions that were like in the red/negative compared to holding the market. But as always, you let those things perform. You let the fees stack up. You don't make decisions based on weekend volume data, right? Now we're back in the green. We're retaining earnings, so we're beating divergence loss. So keeping up with that strategy. So
Awesome. Yeah, no, I actually in our Discord, if anybody hasn't joined our Discord again, the links are in the descriptions. But I was actually telling everybody this morning in the Discords the exact same thing. Is if you don't like how your positions look, for the most part, if sit on your hands. Wait a minute. Time in positions, definitely. Can work in your favor a lot more than jumping in and out of positions and getting chopped out. So,
100%.
Yeah, no, so one thing I was wanting to get your opinions on It's kind of the hot topic right now for obvious reasons, but World Liberty Fi, the token and the company. Yesterday there was some really good yields. Obviously because all the hype and the talk, and there was 1,000 plus APRs. They've kind of pulled back since then. But what is and David, go ahead and go first. What is your take on World Liberty Fi? It is a DeFi play, RWA play. What is your take on it?
I wouldn't touch it. That's my take on it. Look, so I love.
Please, please don't pull any punches. Could you be a little
So
more
I'm gonna
specific about your feelings on it?
I'm gonna tell you exactly what I think, man. Dude, I love President Trump, and I love what he's done for the United States and for the world. But I don't know enough about that specific project to to buy it. And
Mm.
whenever I see something that's as hyped as WLFI, man, like on the open, like you should have been a seller on the open.
Yeah. Oh, yeah.
And
Look at the chart. Oh, yeah. I'll bring it up real quick.
when I take a look at the chart of it, Mike, when you bring up the chart, for me, this looks like, I mean, dude, unless ETH really pushes higher and BTC is really able to push higher, this looks like something that I would probably sell. Um, it doesn't. This doesn't look like an asset that I would buy. And so, correct me if I'm wrong, but WLFI, the token, how are cash flows from World Liberty Financial almost not distributed to token holders, but what is the mechanism by which token holders participate in those cash flows? Like, is there going to be a buyback program where tokens are going to be burned? Is that going to happen? What is World Liberty Financial actually holding? Are they holding a bunch of ETH, a bunch of Bitcoin, a bunch of other alts? What's the value of their portfolio? And is this WLFI token, is it almost like just a representation of the portfolio? Is it Can the WLFI token be yield bearing in some way? I just honestly, like, it's just too much hype. I wouldn't touch it right now. I would wait for things to calm down a little bit. But that's just me.
Hmm?
Well, before I ask Miles, what you just asked David, Jake, what's your take on it?
Yeah, so like similar thing, right? Obviously, you see a launch as hyped as that, you're going to see a pretty big crash afterwards. I think it's pretty reasonable. You'll have a couple months of people calling it a scam, people calling it a dump, whatever, and then maybe if it actually does have utility, it picks up then. As far as like liquidity pools go, we've had a lot of clients like ask, like, is this something I should invest into? Is this something I should park my capital in? And similar to David's perspective, I wouldn't touch it specifically in liquidity pools. I can share my screen over here on Metrics
Yep.
Finance. There's a World Liberty Fi to USD1, which is their stablecoin as well. Liquidity pool right over here. And when we look at this, you'll notice that we're doing these crazy APRs of like 1,600%. But let me tell you why that's a little bit misleading and how you can get a more accurate depiction. When we look at the first day trading on this liquidity pool, August basically 31st, you do $113 million in volume that day. That's all the buyers buying, expecting to make millions or something like that off of their $1 to $2,000 investments. It's also all the sellers.
Trump meme coin 2.0.
Yeah, yeah. It's all the sellers. Probably, who knows, it maybe potentially including the team dumping tokens, but also just people dumping profits if they did get in early or pre-sale or something like that. And then the next day you have $16 million in volume, nearly a 90% decline in volume right there. And the day after that you have $7.75 million in volume, and I'm eager to see how that plays out today. So my point is, if we're looking at an average of $45 million of volume per day, yet we're only doing 7.75, this is not going to be an accurate APR. So we can simply just adjust this calculation time frame to use just the past day. which is going to be way more reasonable than using the past 3. And using that, you'll see that we are actually realistically doing a 272% APR. But again, that does not account for the fact that we need to go with a broader range, because this is, well, a token that's most likely going to continue to decline for a bit. So I would probably be looking at a min price of minus 30%. And of course, my max price, if this thing starts to go up, I want some upside, so plus 40% or so. And then when we look at that, we're at 205%. So it's a question of, is the risk worth the reward? With something like this, so speculative, I probably wouldn't deploy my capital into it. As of now, I'd wait for things to calm down, and I'd wait to see kind of a more stable trend within the volume. If you want some exposure to it, I do it outside of liquidity pools, because anything, any price appreciation that you're expecting to have, that's going to be greater, and it's going to obviously have divergence loss in the liquidity pools, so you wouldn't want to be in that situation. So
I always love both of your takes because they're all, very emotionless, data driven. I mean, and that's exactly what we want to do here. But real quick, what I want to do is the AI, Miles. I actually want to ask it that question, David, about that you raised about the tokenomics and the utility of the World Liberty Fi token. I want to see if it's if it's able to come up with anything. So let me bring that up real quick.
And Mike, while you're doing that, something that Jake brought up when he was talking through the liquidity pool opportunity with WLFI paired with a stable. One thing that I think is really important for us to just touch on real quick is the volatility of WLFI. So, Jake, in metrics, do you have a data point for vol for World Liberty Financial?
we have a like a price volatility indication of the pool, which should work because it's World Liberty Fi with the USD1, and we're reading on that one 21.5% or so using the past 3 days of data.
Okay. So the metric that I'm looking for would be historical vol, because there are no options markets, obviously, for WLFI. But if I had to guess, just based on previous launches, I would guess that the vol for WLFI is above 100%. So what that means is you can calculate the expected move over the next day or over the next week. And so let's say that its vol is 100% and its price is 21 cents right now. Then you could figure out the expected move over the next day. And so, Jake, if you're setting a range that is, plus or minus 20% wide, but because it's so volatile, that the expected move over the next day will bring you to the bounds of your range, and you're only able to earn 220 or 280%. Now,
For like
that
8
fee
hours.
APR, yeah, I mean, that fee APR might sound great, but on a risk adjusted basis, it just doesn't make sense to be an LP.
And those of you that don't, maybe understand, and correct me if I'm wrong, what that means to me is basically impermanent loss. So you might be earning 300% APR, but if you're only earning that for 10 or 12 hours or 24 hours, it's not going to be enough to adjust or to make up for the movement that David's talking about. Going to the the top end or the bottom end of that range. So these are all things that you need to understand about liquidity pools before you enter them. And that's kind of why I wanted to have this discussion, because it's the perfect example. World Liberty Fi, plenty of hype, plenty of exposure, plenty of people talking about it on socials and everywhere else, in mainstream news. Donald Trump, of course, and his family are the ones that are, part of it. So it has all of the fundamentally, you would think that it would be a great project, but not necessarily something you want to jump into a liquidity pool on. So real quick, did I nail that, David and Jake, or was that kind of all right? I just wanted to simplify it a little bit
Of
because
course.
not all of us got the mastermind brains. So let me bring up Miles real quick.
So WLFI.
Hey, how's your afternoon going?
Oh wow. Okay, I'll shut up for a second.
Hey, Miles, real quick, we're live on the show, DeFi Crypto and Airdrops with David and Jake, and we were talking about World Liberty Fi and its token. Are you able to find that on the internet and information on that?
Gotcha. World Liberty File. Hmm. Yeah, one sec. Okay. Looks like it's a decentralized social app with a focus on rewarding creators. Uses a token called uh it's built on the Sui blockchain, apparently.
No.
Anything specific you want?
So,
All
World
right.
Liberty Fi is Donald Trump's project with his family. The ticker is Whiskey India Foxtrot India. Can you find that?
uh,
Okay.
WLFI.
Good to know.
So you gave it
Whiskey
the wrong
India,
ticker,
Foxtrot
Mike.
India. Whiff. Yeah, pulling
Wi-Fi.
that up now. Meme coin, launched by the
All right.
Camp Trump team.
I was just corrected by
Gained a lot of
David.
traction.
It's Whiskey Lima Foxtrot India.
Whoops, my bad. Whiskey Lima Foxtrot India, WLF. Got it. Easy mistake. Phonetic alphabet can be tricky. So, still pulling info on it. Looks like the price has jumped quite a bit in the last 24 hours. It's definitely getting attention.
Okay, my question is about the tokenomics. So, what is the utility of the World Liberty Fi token? What is it going to be used for in the ecosystem? It's a DeFi RWA play. Can you tell us what the tokenomics are for it?
Okay, digging into the tokenomics now. It's kind of interesting. So, the WLF token is central to the reward system on the platform. Creators get rewarded in WLF for
All right,
content,
never
and
mind.
users earn through engagement.
All right, he's struggling with this one. It's
AI
a
is
it's a
letting us down today.
yeah, it's a newer project too, so it
Yeah,
might
makes sense.
Yeah, so
I'd be interested to try it with ChatGPT too. Sometime. I'm not sure what the results would be on it, but yeah.
I really love Miles because you can just talk to it. You don't have to like type it in and stuff.
Well,
But
ChatGPT has like a talk thing, and
oh
they have ChatGPT FaceTime now.
oh nice.
The work is you could go on here. Hey, what is this that I'm pointing my camera at? So
So I'll fill in the blanks with the
oh,
Uh,
the blanks are not going to be filled
and
quite
I
yet.
know, and he went blank.
in the
Man.
You're
what's
back,
up?
Mike.
Oh sorry. So yeah, my understanding is that World Liberty Fi token is going to have utility. And actually, you know what? Let's just do this. If you guys, David, if you want to start sharing some of the some of the strategies that you're using right now, because you said you were wanting to jump into some stuff. If you want to start jumping into that, I'll dig up a little bit about the tokenomics and utility of the World Liberty Fi token that I can inject whenever we have a pause.
Sure. Yeah. So here, let me start things off with a screen share. And I'm just going to go ahead and share. Let's see here. I'm going to share the entire screen. And I want to talk through, what I do to, support myself using DeFi. And I live my life through, on the Ethereum chain. And because of liquidity provision, I'm able to pay for literally everything in my life. It's not just liquidity provision. I'm also a full-time trader, but I just want to talk through a couple of LP positions and my thought processes with these LPs. But I also want to talk about some of the risks and some of the things that you need to avoid. Okay, so there are a lot of people who would take a look at an ETH stablecoin LP and call it an impermanent loss factory. And they would be correct in saying that, okay? That is correct. But as I discuss my strategy here a little bit more broadly, hopefully you'll understand, by the time I'm done going through this, why I'm okay accepting the inevitable divergence loss that I will suffer being paired with a stable in exchange for the yield that I'm earning here. Now, let me just point one thing out real quick. You see this fee APR of 21% on this ETH USDC position over on Base. I claimed my yield a couple of minutes ago here as I rebalanced this higher. So at that, it takes about 24, 48 hours for Revert to gather enough data to calculate an accurate fee APR. I expect that the fee APR for this base position will be pretty similar over the next 24, 48 hours to the fee APR for this mainnet position. Okay, so what have I done here? I started off in the Discover tab in Revert. Now, you could absolutely use Metrics Finance and its screener to complete this initial research, but because my plan from the very beginning was to use the lending functionality built into Revert for my ETH stablecoin LPs, I just decided to use the screener built into Revert here to get started. So my starting point, I knew that I wanted to be able to borrow against my Uniswap v3 LPs on Revert. And so that means in order to be able to do that, I can only operate on one of three chains, either Arbitrum, Base, or mainnet. And so I have selected ETH mainnet and Base for the first two positions, but I'm going to open a third position on Arbitrum in the not too distant future. So that's the first item. I can only operate on one of three chains, and I can only deploy into concentrated liquidity pools on Uniswap v3 that contain specific assets that I can use as collateral over here on Revert. Well, really, I'm using the Uniswap v3 NFT as collateral, but the position can only contain approved assets here. So that was the first part. Now I need to hop into the screener. And let's go ahead and take a look, and let me walk you guys through why I selected the specific positions that I did. So first off, I need to filter by network. So again, I'm only going to look on mainnet, Arbitrum, and Base. And then the tokens that I'm going to look for here, I want only an ETH stablecoin pool. That's what I'm looking for. So I'm going to select ETH and all of the stables, USDC, USDT, DAI. Now, you could add in bridged USDC, that would be USDC.E. Those pools on mainnet and Arbitrum can sometimes perform well, but I don't really want to take a look at bridged USDC. I just want to stick with these, okay? So first filter was by chain because I'm going to be borrowing against the LP. The second filter was by token because I can only enter CLPs that contain specific assets and be able to borrow against that. And then the last filter here is going to be, well, not the last one, but I'm only going to look at Uniswap v3 pools and the TVL. So TVL minimum is going to be 500K. And I'm going to click apply. Okay, now, what am I going to do next? Well, I need to be able to sort by one of these metrics. And the metric that I sort by is fees to TVL. Now notice over here in the time frames that I'm taking a look over the last day. And over the last day, the highest performing ETH stablecoin pool is wrapped ETH USDC at the 1% fee tier on Base on Uniswap v3. So 1 day is not enough data for me. Instead, I'm going to take a look at 1 month and 1 year to help me determine which ETH stablecoin pools are the top performers. Okay, so I zoomed out to 1 month. I'm sorting by fees to TVL, and what I can see here is that according to these data from Revert, wrapped ETH USDC at the 0.3% fee tier on Base on Uniswap v3 has been the top performing ETH stablecoin pool over the last month. Now, this is also a position that I am currently in. I'm in this pool. Now, notice the fourth best performer. This is also a pool that I am in. This is on mainnet, wrapped ETH USDT at the 0.01% fee tier on Uniswap v3. Now, I could stop here and I could say, hey, you know what? 1 month, that's plenty of data, but I'm not done. I really want to zoom out to 1 year and just see over the last year, which of these ETH stablecoin pools have been the top performers. And so right here, we can see that wrapped ETH USDT at the 0.05% fee tier over on Arbitrum on Uniswap v3. This has actually
David,
been
real quick, what is that V tier? What does that mean?
fee tier.
A fee tier. What exactly does that mean?
Sure. So the fee tier is what traders pay when they swap asset A for asset B. Let's say that
Okay.
you're on Uniswap and you've got some ETH and you want to swap that ETH for USDT. Well, you're going to pay the Uniswap fee plus whatever the fee tier is on the pool that Uniswap routes that trade to. So
So
traders,
basically, the higher the number on that, the more fees that you're earning.
not necessarily.
Okay.
So because it's a combination of factors here. So it's a combination of the fee tier, the total value locked in the pool, the volume flowing through that pool, your position size as a portion of the TVL, and your range, how wide or how narrow your range is. All of those things taken together will determine your yield. But the fee tier is what traders pay for the privilege of being able to swap asset A for asset B. The fee tier is what we as liquidity providers earn as a result of providing our tokens to the pool as liquidity. So the fees that I'm after, that's that's what I live my life off of, is the yield here. So it's not about selecting a specific fee tier pool. Instead, it's about selecting pools that contain assets that I want to hold and where I can earn the most yield I possibly can while taking as little risk as possible. So all of these things I'm thinking about when I, look for a new concentrated liquidity pool to enter. But yeah, just to answer your question, Mike, the fee tier is what traders pay and it's what liquidity providers earn.
Okay.
Cool. All right. So zoomed out here to 1 year, and it looks like wrapped ETH USDT at the 0.05% fee tier on Arbitrum on Uniswap v3. According to Revert, this has actually been the best performing ETH stablecoin pool over the last year. Okay, so this is how I could start and perform some initial research. Now, let's zoom back into 1 month, and then let's talk about the 2 specific positions that I'm in right now that are working really, really well for me. Wrapped ETH USDT over on mainnet and wrapped ETH USDC over on Base. And let me bring it back over here to the dashboard and connect my wallet so that we can just take a look through this stuff together. Okie dokie. So I want to start things off by talking about using the borrowing function. And I want to talk about value at risk. Okay. So you might think that I've got 130K value at risk, but I think that you would be incorrect in assuming that. And here's why. My owned equity in these pools here is the difference between the total asset value of the positions and the sum of what I have borrowed. So my total owned equity in these 2 positions is, if I bring up the calculator, it's close to 49K. Let's call it 50K. So my value at risk in these 2 positions is actually 50K, not 130. Okay, so that's the first thing. Now, what does that mean for my effective fee APR? Let's just take a look at the mainnet position first. So if I've got a 60K position and I've borrowed 37K against it, just to keep it easy, I'll just say that I borrowed 30K against it. that would effectively mean that I've got 30K in equity in this position. And if I'm doing 160% on 60K, then on 30K, I'm doing double that fee APR, generally, roughly speaking. So that means that I'm doing closer to 320% fee APR on my owned equity in the position. Okay, so that's pretty darn cool. Now, let's take a look at this borrow function real quick. So there are two options here. You can either borrow against your Uniswap v3 NFT as collateral, or and when you use the borrow and just the borrow, then you're depositing this Uniswap v3 NFT as collateral onto the Revert protocol. So you will lose custody of it. Revert will retain custody of it until you repay the borrow in full. So that's one thing to keep in mind. You've got to trust the Revert protocol. The second thing here is this amount to repay. When you use the borrow function, this amount is deposited into your wallet, okay, as USDC. So when you use the borrow function, you are depositing your NFT as collateral, borrowing USDC against it, and that USDC is deposited in your wallet. And you pay whatever the borrow APY is. This is variable. Okay? So as long as you're doing something with what you borrowed that's paying you more than what you're paying to borrow, then you've got a positive arbitrage there. So that's the borrow function. Now, one thing to know about the borrow function is that when you borrow against your LP, it does not increase your position deltas. Your LP deltas do not increase if you just borrow against your LP. Let's talk now about the leverage function. You got to be really careful with this. So, this leverage function will do the same operation. It will deposit the Uniswap v3 NFT as collateral, and it will allow you to borrow USDC against it. The difference is that the USDC that you borrow, instead of that USDC being deposited into your wallet like it is when you use the borrow function, instead, the USDC that you borrow will immediately be swapped for further pool assets to increase the notional size of your position. And so, what that means in practice is you've taken on a loan, so you're levered long, and you've multiplied your deltas in the position. So if markets move against you, you've got this big, almost like a brick wall of USDC, and your deltas are doubled. Well, depending on how much you lever it up. So let's say that you lever it up 2x, then you've doubled your deltas, and you've got this big brick of USDC that, if prices move lower, you could get hurt really fast. So be super, super careful using the leverage function. But if you just borrow against an LP, you're not adding to your deltas. So that's important. It's
So,
easier to.
David, is this? Would you consider this a short-term play or a long? Because in the chat, Ellie and Jay are asking, just kind of what is your, your and Jake's, and we'll get to Jake here in a second, but what is your kind of short and long-term plays? What would this fit, into?
This is a long-term play for me.
Okay.
So these positions, these have been working extremely well for my intended purpose, which is to generate cash flow up here. That's the purpose of entering these LPs. Now, if I have 50K value at risk between these two LPs, and I'm able to do between 8 and 10% per month in cash flow, that would be roughly 120% fee APR, then I should, over the next 90 or 100 days or so, get to about pretty close to 50K in fees, if I'm lucky. So that would mean that I would have essentially earned back all of the equity that I had at risk. So I would be essentially, able to achieve an ROI on the owned equity between these two LPs. Now, that's my goal here, and I'll be in these positions for the next several months. But let me just point out what you need to avoid. Or you can't really avoid it; it's unavoidable. But one of the risks of being an LP. I'm going to go ahead. You see up top here how I have add exited turned on? I'm going to change the reference value. So you might think, oh, look, he's $3,000 in profit. That's amazing. Well, not so fast. These are stablecoin LPs, man. These are divergence loss generators. So let's take a look first at hold. Okay. So what does this negative $14,000 number mean? Well, what it means is that number one, it's a little bit misleading. It's too low because it includes my total fees that I've earned. So this total number here is actually closer to negative 25K. So what does that mean? Well, it means that if I had just held the assets that I deposited into these two LPs, I would be plus 25K from where I am now. So I massively underperformed just holding, but I knew that I was going to experience that divergence loss before I entered these positions. And the reason why I was okay with that and continue to be okay with that is because I borrowed so much against them that all I have to do is keep these things in range for the next 90 or 120 days. And I will have, assuming that ETH doesn't like double over the next 90 days, then I should get close to zero divergence loss. The way that you beat divergence is by staying in range for long enough to earn enough yield and without rebalancing. So a ton of divergence here. Now, take a
Well,
look at this.
I have a quick question for Jake. So Jake, with what David just went over, he was talking about shit. What was it I was going to ask? The it had to do with the divergence loss. Anyway,
Yep,
sorry, I lost my train of thought.
you're good.
Go ahead, David.
Yeah. So I really don't like looking at that number. So instead, all I do is I just go, oh, okay, I feel better now. Just looking at USD. But if I change it to ETH, let's measure my performance in ETH terms. If I had just held the assets, I would be plus,
Oh,
4.75 ETH.
real quick before I forget again, I remembered. So Jake and David. So whenever you are in positions like this, and you have impermanent loss, or versus hodl, how much of a weight do you put to it for positions like this, to where you're just trying to generate residual income that long term that you're going to make up for, but versus hodl, you don't make as much, but you're still profitable. I mean, is that something that really weighs on you, or are you looking at it from a standpoint of I'm just looking to earn residual income. I don't have a crystal ball. I don't know, what hodl is going to do. Like right now, we're just kind of trending sideways. We're dumping here and there,
Yeah, Mike.
but
I'm sorry for interrupting, Mike, but
oh, go
all
ahead.
I'm thinking about here is I've got 130K working for me. I've got
Yeah.
50K value at risk. I've earned 11K in yield. In
Hmm.
90 or 120 days, I'll have 50K in fees. So
Okay.
I will have, doubled my original value at risk. And so for me, because I've borrowed so much against these LPs, and I knew going in that I was going to experience a ton of divergence, it was never about trying to mitigate divergence for me. It was
Hmm.
always about how do I reduce the value at risk, increase the amount that I'm earning each day, and live off of the yield. So if I've got 50K value at risk, but I'm doing, close to $500 a day in yield right now, I'm doing almost 1% per day on my
So
owned equity on the position. So that's
So
kind of the way
Jake,
I think about this.
Yeah.
what is your take on it? Like, because I know that sometimes we all obviously differ on our strategies. So I mean, like whenever you're entering a position, if and I think I know the answer, but just the is it more important for you to perform versus hodl, or just are you long term looking at the residual income that you earn, like David is?
Mhm. Good question. Yeah, so I got my screen pulled up here, and I think this will be the perfect pairing because David just spoke really highly on the income generating side of things, right? And using this as a way to generate income. And what I'm about to speak on is what I like to call asset accumulation. So essentially, as David said, the crypto to stable pools, those are impermanent loss factories. But here's the question, right? Impermanent loss is opportunity cost at the end of the day. It's, hey, Jake, hey, David, you missed the upside, right? But maybe your goal isn't the upside. Maybe your goal isn't to speculate on if prices are going to go up. Maybe your goal is to sacrifice the speculation on something that is more predictable, which is the short term income that you are generating. And that's exactly what David is doing. And he's getting paid 8 to 10% per month, which is really damn good for that, right? And he's living off of it. Whereas it's a different strategy with what I'm running. What I'm running is asset accumulation. So as you can see, you look at my portfolio right now, I'm astounded at a 43% APR on these positions. Usually this will be more like 50, 60%. And usually I'm running more positions, but I have more in the market that I'm just holding right now because the market's volatile, right? And I'm looking for new opportunities and I'm not rushing it. But my point is, in these positions, what I pay attention to, and this is metrics finance that we're using, are two metrics. Number one, our versus hodl, and number two, my retention. Because I know if I dive into Ethereum and Render and I hold those are going to be down, they're going to be up, they're going to be down, they're going to be up. They're going to bounce around, right? The only thing is, right, we're going to have an overall metric that says overall profit loss for Render or something, or overall profit loss for Ethereum. And that will tell us, hey, overall you're up, overall you're down, right? Whereas over here, we look at this and this is down, yes, $392, but we have $100 in earnings right here. Or sorry, $164 in earnings. And of that, we are keeping about $103. And when I say keeping, I mean all of these earnings come into our wallet, don't get me wrong, but we kind of have to pay down a divergence loss, which is essentially the difference between holding in the market and being in an LP. So when we look at earnings retention, what that's doing is that's saying, okay, we have $321 in earnings. How much divergence loss do we have? Well, when we do the math, our earnings after divergence loss, also known as versus hodl, is $245. So if this number is green, that means we succeeded at accumulating more assets, right? Whereas if it's red, if it's in the negative, that means that we actually lost money compared to hodling by being in a liquidity pool. And we could have done that scenario with our profit loss being at a multi-$1,000 number. We could have a red loss versus hodl basically. And that means that, hey, we made a bunch of money, but we lost compared to if we just stuck it in these assets and held. We would have made more money in that instance. And more importantly, with earnings retention, what this comes down to is how much of these earnings are we retaining, right? So we have a green profit versus hodl. Retention expresses this as a percentage of the earnings. So when we have a higher retention, highest can be 100%. A higher retention ultimately means that we are retaining more of our earnings. We have less divergence loss compared to it, which I would consider 75% something that's kind of like average or maybe good, depending on what assets you're in and stuff like that. So
Awesome. All right, David. Yeah, it's sorry. I just wanted to make sure that we that we got that take in there. But did you want to continue on, David, or?
Sure. Yeah. The thing for me really is intent. So let me go ahead and get my screen share rocking and rolling one more time here. And
and,
so
and
my intent when opening these LPs was, of course, I would love to be able to outperform holding, but I never expected to be able to outperform holding in these stablecoin ETH LPs. Instead, my intent when I opened these positions was to, number one, borrow as much as I possibly could against them, because I don't believe that ETH is going to, retest $2,000, let's say. So, number one, I wanted to borrow as much as I possibly could. And number two, I wanted to get my fee APR up to like above 100%, maybe 120%, something like that, so that I can generate as much cash flow as possible and get to an ROI on my equity in the LPs as quickly as possible. Now, I'm always thinking about the downside. And what would happen if ETH were to be down tomorrow by 20%? Heaven forbid. Just, thinking about the risk here. What I could do is I could hop in here. Let's say I go into the simulator and I scroll down and I say, okay, well, if I know that my liquidation value for this LP is 48K, then if ETH were to head down to $4,000, let's say, then what would be the value of my LP? Well, if my liquidation value is at 48K, and if ETH is at 4,000 and my simulated pooled assets are 55,388, then I would not face liquidation with ETH at 4,000. Let's say that ETH rolls
All right.
all the way. You see what I'm getting at here?
Oh no, definitely, definitely. And sorry, I don't mean to cut you off. It just time flies, and we're only got 10 minutes left.
Oh,
So,
gotcha.
yeah, I definitely want to make sure that we, get on some other topics here. But Jake, I mean, kind of, what is some of your long term strategies right now with where we're at in the market?
Yeah. So as I was just mentioning earlier, it's basically just accumulating more assets. I'm very bullish on crypto. I know that, hey, if I wasn't in LPs right now, I would be hodling. I would be holding assets, right, and still dumping a huge portion of my monthly income into this stuff. So when I look for strategies, that's exactly what I'm looking for. I'm looking for high quality assets, as we discussed, stuff that actually has a business model behind it and uses that business to grow the actual token itself. And then I find assets like that have a high correlation to another asset, whether it's ETH, whether it's Hype, whether it's Bitcoin, Solana, stuff like that, are the typical ones that I'm targeting. And then I pair them together in a liquidity pool, usually a broader range, like I'm typically in positions for about a week and a half, 2 weeks or so before I need to rebalance. And again, focusing on maximizing that profit versus hodl. And if I'm down on those assets, as long as I truly am bullish on the assets and as long as I have underlying conviction, I'm still holding them. And if there's
So,
scenarios where it's just like, here, one sec, just where it's so bad that I have like such a huge loss or something, I'll start to implement contingency strategies, which is like, do I need to make my money back from here, or can I make it back quicker and at a higher probability from somewhere else? Or is this just a case of the market like completely bleeding, and Ethereum's also witnessing this, Bitcoin's also witnessing this, and this is just completely normal and part of the game? Those are the things I'm looking at. But yeah, go ahead, Mike.
so which assets, Jake, are you bullish on right now?
Yeah, I can share my screen over here and just kind of show you guys what I'm holding. Um,
Ellie's asking.
yeah. So right now, I'm in an Ethereum to render liquidity pool with about $22,000. That one is doing about a 47% APR. And I'm also in this UBTC to hype one that is doing a 40% APR. I will say I tried this one on Project X for a period of time. This did like about 60-70% on Project X, and then it started to go down on Project X. So I switched it over to Hyperswap. And it looks like the yields are somewhat equal now. So maybe when I rebalance, I end up switching back over to Project X. Nonetheless,
Okay.
this is beating hodling the market. Happy with that. And then as far as what I'm holding, I have a good chunk of Ethereum. This 20K is actually money just waiting to be in liquidity pools, waiting for opportunities to come along. Something that looks nice, can outweigh profit versus hodl and stuff like that. This Tau is part of a contingency strategy. So I had a Tau pool that had decent chunk of divergence loss. So I'm holding like 85% of the exited assets in Tau. And then when Tau hits a specific price, which I believe is around $400 or so, I'll actually be a profit at my entry price. And then Aether's a big one I like. Ondo's a big one I like. Hype, Desync, I like AIOZ and some of those assets. And then over on Aave, which is where I have my long-term stash. Again, I'm pretty risk averse here. I just have 43K in Wrap Bitcoin, 35 in Wrap Staked ETH, 16 in ETH, so about like 50K of exposure to ETH, 8K of exposure to Link, 3.1 to Aave. And this borrow right here, a lot of that has just been used to leverage these assets. Some of it's been stuck into a liquidity pool. Some of it's been used to like pay gas fees, just random stuff, but it's a relatively safe borrow. But yeah, and then I have like 5.7 of Paul as well. And I'm glad that we're starting to see a little bit of traction over on Paul as of recently. So
Awesome. So, David, it looks like a lot of the stuff that you were showing, it was definitely things paired with wrapped ETH or ETH. I mean, what's some of the projects that you're bullish on right now?
Sure. Here, let me go ahead and just hop in, share my screen. Let's jump into TradingView. Okay, so some of the items that I am most bullish on now. Number one, I really need to see BTC break above 113.5 just to confirm the breakout from this falling wedge. That's number one. Definitely bullish on BTC. Let me zoom out to a daily. I think that Bitcoin by the end of the year will probably be, at 150 or above. When I take a look at ETH here, I am a big holder of ETH, and I expect ETH to continue to outperform Bitcoin for the foreseeable future. And you can view that if you just take a look at ETH in Bitcoin terms, ETH BTC. So ETH appreciating in Bitcoin terms. So I'm long Bitcoin, I'm long ETH, and I'm starting to think about maybe adding to my very small Solana position, simply because if there is another rotation, so the first rotation we have already seen from Bitcoin into ETH. And you can see that if you take a look at ETH BTC, this sharp move higher. But we're also, I think, starting to see a rotation into Solana a little bit. Let's take a look at Sol ETH. So Sol, it has found some support in ETH terms and has started to bounce. Keep your eyes on this. Sol in Bitcoin terms, I've got a bunch of spaghetti drawn on the chart here. Let me remove that. Sol in Bitcoin terms has put in this really nice W pattern here, broken out, and it looks like this could move up here somewhere. So I like Sol here. I like Bitcoin, obviously. I like ETH. But if we take a look down the risk curve a little bit, I quite like Hype. Now, Hype reminds me a little bit of BNB. And if we just take a look at BNB real quick, another excellent performer. BNB last cycle, okay? BNB last cycle in January of 2021 was 40 bucks. Where's Hype right now? 45 bucks. I'm just trying to say that maybe we see some type of, 10x out of Hype this cycle, similar to what we saw out of BNB last cycle. So bullish on Hype. I really like Aave with their governance token, AAVE. This looks pretty good to me, but is it time to buy Aave or not? I need to see any alt that I'm thinking about buying, it needs to be at a minimum outperforming ETH. And I just don't see that here for Aave, not yet. So, although I'm bullish on Aave, I would just want to see a little bit more downside out of Bitcoin dominance and a little bit more of a push out of Aave in ETH terms. I really like EtherFi, ETHFi. I use their products every single day. This pattern doesn't exactly look all that great, but a breakout here, and this thing could really run. I really like Pendle, and I've been building a fixed income portfolio on Pendle that I'm sure we can talk about maybe this Friday. I like Pendle quite a bit. At Tau with the layer one, it's almost like an AI layer one, not almost like it is. That's exactly what it is. I quite like Tau, and then if I just had to throw out a couple of others, you know, maybe Link. Maybe Link has an opportunity to push back
Yeah,
up towards its all-time highs.
definitely linked with their new partnership with Swift, and I mean, it seems like every time you turn around, they got something going on.
Yeah, and Arrow, just because of the Coinbase, I think Arrow probably moves back up to $2.30 at some point. And
Mhm.
here's one that I've been watching: Tron, TRX. This is
Tron, I really like because they have a lot of TVL and stables on Tron.
and Mike, look at this pattern. This is a parabolic pattern.
Oh yeah, it's beautiful.
You know, like let's just see this thing go straight up like that. you know.
Yeah.
And then if I had to pick a couple of memes, I'd probably pick Fartcoin and Doge and SPX. I think that at some point this cycle, maybe Pengu, I think at some point this cycle, memes will have their day in the sun again.
They always do.
Yeah, and then I
Love
like
them or hate them, they got a place. They got a place.
yeah, and then you can go down the risk curve here, but those are the items at the top of my watch list.
All right, well let's finish this out with a couple of questions from the chat. So Stan says the guest's expertise is exceptional. Are they self educated or did they enroll in a DeFi academy?
It's a good question. I'll start with this one. My DeFi Academy was losing $50,000 before I
The cost
started
of
to
your
learn.
education.
Yeah, a big chunk of that was UST Luna, I will say. But that was also a big eye opener. Like, oh shoot, like anything can happen in this space. Like even if it has a multi-billion-dollar thing, which naturally makes you pay more attention to every other aspect of DeFi as well. So through Ponzi's, through learning that this isn't sustainable, through diving into stuff that has just like random tokens that don't have any utility, to diving into stuff that crash like UST. That was my education. And then as far as like learning mechanics and everything, a lot of it was just going through what little resources at the time were available. And I've been in this for like 4 years now. So like, and just trying out different things and failing on some things, succeeding on others. And now I try to provide good education to kind of solve that problem.
Awesome, awesome, David. Like I know that you have a TradFi background and you've kind of migrated over for the most part into DeFi. But tell us a little bit about how you got your education.
Sure. So in 2010, when I was a junior at UC San Diego, um, I I met a guy who I started a biotech company with, and he introduced me to options trading. And when I first became introduced to options trading, I immediately fell in love with it. And I started trading options on GLD and SLV, that's gold and silver, those two ETFs, back in 2010 and 2011. And so, if you recall, back in 2010, 2011, what gold and silver did then, silver went from $18 to just a hair shy of $50, and gold ripped up to, I think it was like 1910 was the high or something like that. So, my first introduction to trading, I was massively profitable. And I thought, oh man, this is great. I can do this.
This is easy.
I was trading from my dorm room. I thought I was, like a genius or
Genius.
something. Yeah. And then in 2012, I bought my first Bitcoin for like $40. Didn't hold it. I don't know how, like, if someone bought Bitcoin for $40, how do you hold something if you've got 1,000x or a 1,500x gain? It's so hard to hold. You've got to be just a savant or just a true believer to hold it, man. But yeah, my introduction was into options trading. I spent the next decade honing my options trading skill set. And I learned from Tom Sosnoff and Tony Batista over at Tasty Trade. When those guys launched Tasty Trade in 2011, or maybe it was early 2012, I was one of the first people on their platform. And they actually featured me. I flew out to Chicago to be on their show as a rising star in options trading. And so they had a whole segment with me in their studio there. That was really cool. But it wasn't until really like 2023 that I got into DeFi full time.
Mm.
And my start in DeFi was really when when the base chain launched.
Mm.
Um, so, I was on Aerodrome and Alien Base like week one, Alien Base, that ALB token ripped higher like in the first couple of days, did pretty well with that. And then how did I build the skill set? Well, liquidity provision is very similar to options trading. So that was just a natural fit for me. It was really mostly about learning the mechanics of how to get in and how to get out, the things to avoid and the things to do. And that just came with time and experience. So I paid my market tuition as an options trader. I've paid my market tuition as a DeFi operator. And now, I've been doing this for a living for the last couple of years. And this is all I do.
Nice. That's awesome. So yeah, no, it's so I guess to answer. Let me see, where is he at? There we go. Louise's question. Basically, they self-taught. I mean, they had some background, but for the most part, trial and error. And again, I mean, that's kind of where I was at. Is I wanted to learn DeFi, and again, everybody I was able to find, Jake, he taught me a bunch. I had to watch, many of his episodes multiple times, because I didn't understand what he was talking about at the time. I had to Google the different terminology and things like that. But that's what you need to do. And that's, again, why I started this channel as, kind of an entry level, this is the 101, so that, it gives you that stepping stone to, learn from David, learn from Jake, learn those advanced strategies that are things that I'm still learning. So, again, I just want to emphasize that, here at DeFi Crypto and Airdrops, this is more of a vlog of my journey into DeFi over the past year. And as I learn it, I can, basically on these episodes, you can see, because I'm fully transparent about my portfolio. You can see the mistakes that I'm making so that you can learn from my mistakes so you don't have to make those mistakes. And then, you see, as I learn from people like Jake and David, and as I evolve, then you can evolve with the community. So I can't stress enough how important it is to subscribe to channels like this and subscribe to our Discord, so that you can learn from a community, a safe community, where we're not shilling projects, we're not trying to get you to do things that are going to financially benefit us. We are all just trying to together learn how to make money, residual income from DeFi, to change our financial futures and the financial futures of our families. So with that, gentlemen, I definitely appreciate, as always, taking the time for this, because I mean it's so valuable to everybody out there, because I mean there's so few people that do DeFi, let alone share what they learn. So this is a very, very unique experience for a lot of people. I hear it all the time in the Discord and in the chat. So let's see, Ellie. Let's see. Seriously though, who does take profit on Bitcoin after it goes from 40 to 10,000? Um, Opinions on Neon. Have either of you heard about Neon?
So Neon, Jake, correct me if I'm wrong, but isn't that the Solana to EVM?
I believe so. Yes, because I
Yeah,
believe
yeah.
what do you call it? Orca's live on it.
Oh, okay. All
I have
right.
no thoughts on
Stan,
the show.
Stan, Stan says the channel deserves a Nobel Prize. I appreciate you, Stan. Um, Ray Sting says, Mike, I wasn't able to get into David's DeFi University. Can I still get the opportunity to join the group?
For sure. I mean, it's open. Anyone can join.
I think what he might have meant was, and but you did miss the window, Ray, to join for free. So it's $97 a month, which by any stretch of the imagination out there is the cheapest that you're going to find. For the quality and the content and the access that you get, to communicate with David and his community, it really is a bargain. Definitely, If you want to dip your toe in, your name is familiar, but doesn't seem like that you've been here very long. If you want to just go through my little free video course to learn the nitty gritty and kind of dip your toe into DeFi and see if it's for you, and then maybe take the next step into David's course if you find that you do enjoy DeFi and you feel that you're going to be able to be profitable at it. That's another way to go too. But if you are going to get serious about deploying liquidity, I highly suggest that you take David's course, because you are going to learn the skill sets that are going to ensure that you're profitable. So
Now, Jake has a course too. And so I think that it's a good idea that when you're figuring out, like, hey, what community do you really want to spend the majority of your time in? Give them all a shot. Like Jake's community is great. I know,
mhm.
Mike, you can go through and take your course. I've got 3 courses in my group. And I
I
just
just know
launched
that
my
the
website.
price points, the price points differ.
Yeah,
So
I think there's opportunity for anyone.
Yeah.
oh no, absolutely, absolutely.
And,
It's
and
just you just have to find what is what you feel cost benefit wise.
Yeah.
And but you need to invest in your education, because like Jake said, he learned a $50,000 lesson. Anybody I've talked to in trading, they always talk about the huge mistakes that they've made, and they look at it as the cost of an education. Would you rather pay for a course that is going to prevent you from losing a large sum of money, or would you rather trial and error, who knows how much you're going to lose to get to the level of being able to be profitable. So
Mhm.
it really just depends on on the individual. But yes, Jake and David both have a very good course. Mine, of course, is free, but it's nowhere near the quality of these gentlemen. So again, you get what you pay for. It's like
Yeah.
mine
so
is mine is free, but it's not as good. Do you want what my colonel used to say? Do you want cheap, good, or fast? Pick two.
Yeah.
It's like
Yeah.
you don't get
I
all.
want good and fast, man.
That's right.
And so Mike and Jake, just real quick, let me just shameless shill here for a second.
Go
Have
I
ahead.
at it.
just
Have at it.
I just launched my website, so it launched today. So this is
Pull it up real quick.
sure. So let me go ahead and just share my screen here, and let's just take a look at this. So this is version 1.0. And you might think that just by looking at this, oh, it's just another DeFi blog. Well, no, it's not actually. So this is actually a machine learning AI app. And as time passes, it will become smarter. And so each of these articles, remember, this is version 1.0. So I launched the MVP today. But these articles are distilled wisdom from over 120 sources. And I'm building a knowledge graph and a vector store database from all of this wisdom, all of these data, and then using it to create these articles. And this is all automated, okay? And so all of the data in here, it's not just a regurgitation, it actually performs analysis. And even just over the last week, as I've turned it on, it started to get smarter over the last week, which is so cool. And many of these articles, I remember there are bugs in here I've got to go in and fix, but many of these articles actually link out to the source material too. So you can see, what sources are being used here. I use over 120 sources. So this will become smarter over time. The website is also where I'm going to be hosting all of the tools that I use AI to make. There's also going to be a link to the university here, and I'm going to figure out some way that I can, use this website for quite a bit more than just, what you see here in front of you. So this is the DeFi U website, and launched it today.
Nice.
Awesome.
Any closing thoughts, Jake?
Oh no, I was just gonna say that's pretty cool how you can have that automatically set up and everything like that. AI has some crazy possibilities these days, and we're using it on a daily basis at Builder Wealth and Metrics Finance. So yeah, and we're also developing like I don't know if I teased this last time, a kind of strategizer AI, like putting together multiple, and I won't go too in depth, but like a lot of our back end stuff and like a model that helps you create your strategy. And we're gonna have that publicly available. So I'm excited for that.
That's sweet. And
That's
Jake,
awesome.
I believe it was this Friday that we were going to do a deep dive. Me, you, and David were going to do a deep dive on metrics.
Yep.
Perfect. All right. So if you're interested in Matrix, because it's there's a free version. If you want to go check it out right now, it's just Metrics Finance. You can check out some of the functionality. But this Friday, we will be doing a tutorial, a deep dive on it, and Jake's going to be giving us the alpha on all the different functionality of it. And I'm excited for it because I'm actually starting to use it, but I don't understand all the functionality. So I'm actually going to be probably on one of my screens. I'm going to be messing with it while Jake's giving us the walkthrough. So, gentlemen, David, I mean, do you have any closing thoughts before we close this out?
No, man, I can't wait for Friday. That's going to be a lot of fun going through metrics like that. That's going to be
Yeah.
really cool.
Yeah.
Oh, definitely. So yeah, as always, I appreciate you gentlemen for taking the time and sharing your knowledge because it's in crypto and DeFi, trading, whatever it is. I mean, being able to learn from subject matter experts, and it's almost like putting your education on steroids. So yes, you can figure stuff out through trial and error. It's going to be a painful process, though. When you have individuals like yourself, it is just so much easier to get from 0 to 60. To get from not being knowledgeable to profitable. And so, I can't thank you guys enough to, showing up here on Wednesdays and Fridays and sharing your knowledge with the community. So, till next time, Veteran Crypto out.
Peace.